Hi and welcome to the Market Alert for Tuesday, the 30th of March 2021. So cryptos jump, small cap dump as Archegos hits banks, bonds and bullion. And as the three rules of trading according to Goldman Sachs is to be first, be smartest or cheat and sell it all before everybody else starts to sell. So what's Archegos? Well, let's just have a quick look here. You may have seen in the news that Archegos 20 billion move to flee certain names led to bank shares price tumbling. I don't know the full details on this. This is a story that is just starting to unfold. If you do a search, you'll see that the news on this is about 10 hours from The Guardian, FT, Wall Street Journal, etc. But it looks like there's a hedge fund, obviously by the name of Archegos, that has got a bit of a 20 billion problem to get out of Viacom and another Swiss. There's a Swiss bank that the name escapes me, but this is likely to cause a few problems going forward. So is this going to be a catalyst for the correction? So I thought I'd bring this to your attention, but if you do a search for Archegos, you will get the full details on this one. I'll have a look at this in a bit more detail later as well. But this is the reasoning behind why everything else dumped and cryptos jumped apparently. And other news, tech bubbles, because obviously we're at the 21 years later now for the bubble in tech stocks. The Nasdaq back in 2000 marked a top, and we're way above this now. But it says here March 10th, 2000 marked the peak of the dot-com bubble. Almost to the day, 21 years later, a new tech bubble is in the process of bursting. All bubbles burst, it's just a matter of time. And this may help, particularly with the dollar, because Biden to float $3 trillion plan on Wednesday as moderate Dems push back on tax hikes to pay for it. So we're going to print $3 trillion, but we're not going to hike taxes in order to pay for it. We'll just add it to the balance sheet. $1 trillion may be devoted largely to building and repairing physical infrastructure with an emphasis on climate change. So more BS. Just a way of printing more money. It will go find its way into the markets, no doubt. It's the usual thing. We had this last year. We get it every year, but in particular since COVID arrived, it's so much easier to just print this money. Now, I assumed that on the yield curve that we were seeing a bit of yield curve control, but that's not the case. We've gone back up to 1.744, spiking up yesterday evening from 8 p.m. there. That's UK time. Let's have a look over the last 5 days, and you can see here this is starting to trend to the upside. So let's keep an eye on this one going forward and see if they do come in with some form of yield curve control over the next few days. But heading into Easter wouldn't be good to see this go to 2%, so keep an eye on this one. And let's have a look, see what we've got on the news front today. Tuesday, just the one news item today, just got consumer confidence. So tomorrow it kicks off a bit with the ADP and employment numbers, but this is all we've got today, and this is out at 3 p.m. So again, the market's going to have to make its own direction. Now the volatility spiked up yesterday to 1746 from 14.13, and that was down to this. There's a bit of nervousness in the market at the moment, so the premiums on the put options have been marked up quite extensively, as you can see here. So this is the reason for the spike. So if we don't get any more grief from Archegos, then we can expect to see this move back to the downside. But at the moment, even though the market went up yesterday, which we'll look at in just a second, the implied volatility is spiked up. So keep an eye on this one. So let's have a look at the Dow. I say this rallied into the close yesterday, if I recall. Let's just have a quick look here. There you go. You can see the market moving up sharply. Again, plunge protection team assisted, I suspect. And there's the new all-time high being created for the Dow as well. Through the 89% that we drew in a couple of days ago as well, and through the old all-time high. So the new all-time high for the Dow, it's relentless, isn't it? It just keeps going and going. no doubt assisted by announcements, and in particular that 3 trillion is going to help. Market looks like it's destined to continue at the moment up to around 35,000 on the Dow. It seems implausible or impossible, but no, not when you look back and see how far the market's come during the last year, and particularly this monthly chart. This time last year we're starting to see the aggressive selling, and then the market moving all the way back to create this new all-time high that we can see in the monthly chart there. So the market, or the Dow in particular, has moved 15,000 points in the last year. But don't worry about the bubbles. They never burst. They continue to move to the upside. But that is staggering, isn't it? Absolutely staggering. But it's continuing to move at the moment, as we can see from the daily chart, with a few pullbacks there. Same for the German Dax. Pull up the right chart. Yesterday you can see the market, it moved lower down to the 5-bar moving average, then continued to the upside. Bit of selling pressure around in the DAX yesterday, but we've already got a new all-time high in the daily chart overnight. The new one is 14,898, so it looks like 15,000's on the cards, isn't it? It's just a hop, skip and a jump to that. 102 points will take us to this level. So yeah, more or less the same that we're seeing in the Dow there. Price is just continuing to move to the upside. Let's have a look overnight, see what the market's doing. Just drag this across a bit, and let's a lot of volume here at this point, whatever time that was, just after 1 a.m. A lot of volume coming into the market to try and support it, and failing to do so. Yeah, some selling around there. So let's just squeeze everything up so we can see all of the pivot points and the averages. So we broke the 200 MA here, then came back and looked at it, and then moved down to the support here at 850. Then we've had a bounce from this point. Price is trading back up to the previous day's high, and of course the high is always important to take out. So again, as the futures market kicks off this morning, I suspect we're likely to see the market moving to the upside. Another cluster of volume here as well to support prices at the 200 MA just here. So yes, very interesting what's going on there as well. So let's have a quick look at what happened yesterday as prices continue to head towards the upside. So like I say, keep an eye on that 15,000 in the daily chart, and also in the 2-minute chart as well, or any of the time frame that you are trading. It's going to be here. You can see it's going to be at the R2, so that's the upside potential. As I say, it's just 100 points up from where we are, and on the downside it's the low is quite a distance away there as well. So it's always good to be able to see where prices are likely to trade to, and that R2 is going to be some serious resistance because it's the 15,000 area, psychological area there. Okay, so have a quick look at the silver market. So this continuing to be moved to the downside, as I've warned over the last few weeks. Still on target to trade down to the $24 per ounce level. I should imagine we're going to see this happening either today, but certainly before Friday, as silver prices are being maneuvered to the downside to allow JPM, Deutsche Bank and Co to buy back at much lower prices. I've also included some other lower targets just in case, down to the $22 area as well. We still don't have that climatic action that you see when they really shake prices out to buy back in. That's not occurred yet. At the moment we're heading for the 24.38. We're likely to see that happen by lunchtime when the COMEX opens, and also if this low is taken out, there's a double bottom now, then we head down to that $24 per ounce level, and then possibly to 23.49 as well, which goes back to this area here where you can see there was nice support before prices continue to move to the upside. Otherwise, we're going down to 22 over here, which also has a major support. And this is the climatic action I'm talking about. So they shake out and then they buy back, and then the market won't reverse and move back to the upside. It will trade sideways and then move up, because that's the characteristic nature of the manipulation by the bankers there. Okay, let's have a quick look, see what the German DAX did during yesterday's session before we conclude. Fairly quiet day. It was no news day for Monday. The futures market, we saw prices find support and move towards the upside there. And I'm just going to fast forward through this. You can see prices trading up towards the DP and above the 200 MA as the futures market set really the direction initially, and then prices just ran out of steam. You can see the selling coming into the market here, and then prices just drifted for the remainder of the session. They floated all the way back down to where they'd started in the futures market at this BRN and the 200 MA there. And it was just sort of like up and down, bouncing off fibs and averages for the morning session. So I'm just going to fast forward through this, because there wasn't really a lot of activity there at all. And then in the afternoon we saw prices open up a bit stronger. The Dow just absolutely steamed ahead initially, dragging the DAX to the upside there, and it was a case of taking a few points off the table as prices came back. You can see there's some potential weakness there. There's a big spike in volume here as well as prices started to come back towards the 5-bar moving average. Then they dropped below and then they found support. The Dow had a second wind and then moved higher as well. I was just looking at the 5-minute chart here, starting to look at the longer time frames, the 5-minute and the 15-minute, to hold positions, certainly on the long side, not so much the short side at the moment. As here you can see prices continuing to move back to the previous day's close and high, but then starting to trade sideways again, and a cluster of volume there at this level. We had a potential sell signal, but the market didn't want to sell off, and prices then just became sideways. Like I say, it was a no news day, which I warned about yesterday. The trouble is, when there's no news, the market's got to make its own direction. But given what was going on with Archegos, it's amazing how prices held as well as they did. Okay, that will do it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.